What's going on, everybody? Today we have another top tier member only video. Only you get to see this because you are a top tier member. Thank you for being here. First off, I just wanted to let you guys know I did post a video yesterday on the visualization of investing based on fundamentals. And I think it's a really important video. Probably, I'm like not even trying to be biased here. Probably one of the most valuable videos I've posted anywhere on YouTube or here anywhere. And so definitely go check that out. YouTube hasn't really been pushing it that much, but if you want to kind of understand what investing based on fundamentals means, or like overvaluation, undervaluation kind of means, if you want to visualize that, definitely go check that video out. It's the most recent one on my channel. Now, in that video, we had to make some certain assumptions and restrictions on the examples, so not everything is going to look like that, but it gives you an idea for context. So in this video right here, I wanted to talk about kind of risk tolerance and a bit of a reality check, right? So right now, Bitcoin, the crypto market, is going through a bit of a rut, I guess you could say. Personally, I don't have too much of my net worth exposed to Bitcoin or Ethereum. I own a little bit of each, but nothing like too crazy, right? Nothing that if I see Bitcoin drop to 20K or like 15K, I'll lose my shirt or anything like that. So I think that brings me to the point of a lot of people say only invest what you can afford to lose, right? Or don't invest anything you're not willing to lose. And I think that's honestly a very misunderstood and misused phrase. And I'd say 90% of the time, people are not doing as they say. Because take this for example, let's do like a little thought exercise here. If you saw, say like, take a position where you're like, oh, this is money that I'm willing to lose. If you saw it go to zero, would you honestly not be like emotionally kind of concerned or upset about that? Because at the end of the day, money is money. I don't care if it's $50, $100, $1,000, $10, right? You're losing money if you lose on that investment. So, I mean, in a sense, saying only use money you're willing to lose is really just admitting to gambling or high speculation. And sometimes that's okay, right? Sometimes if you acknowledge it and you're honest with yourself, like this is genuinely money, I'm okay with losing, then sometimes it can work. But I'd say most of the time when people say they're investing money that they're willing to lose, that's not true. If they saw an account go down 50%, I guarantee you they'd be like, ooh, like that kind of hurts. I got to make that money back. Why? Why? I thought it was money you were willing to lose. So kind of two things with this way of thinking is, one, usually you're not being honest with yourself. Two, you're kind of putting yourself in a mindset, a gambling mindset, not an investing mindset. And that's another crazy thing about this whole Dogecoin thing, is that this is a lot of people's first introduction to what they think is investing. Right now, with the use cases for Dogecoin, yeah, some companies accept it for payment as a marketing kind of campaign. I almost guarantee you that they immediately convert the Doge to USD once they receive the payment. I doubt you they hold any on their balance sheet or anything like that. And you can use it for tips. But this is not investing. Dogecoin is not investing. A lot, like some people ask me about investing in Doge or buying Doge before SNL. And if your investment relies on the appearance and the mention of Dogecoin that may or may not happen on SNL, that should be a red flag. Like, this is not a fundamental investment, right? And so I told a lot of people, I even had a poll in the cryptocurrency chat on the Discord before the SNL thing. I kind of ran a poll. I was like, who thinks it's going to go up or down? I said thought it was going to go down. Some people reached out to me individually, and I was like, I would definitely take some profit before SNL. And sure enough, right, it was like a buy the rumor, sell the news. Because, it was a whole different topic now. But for the future, what you can learn from that is everyone's going to buy the rumor that it's going to be announced on SNL. But once it gets announced, what do you think is going to happen? Do you think all these new people who have not been exposed to Doge or watching SNL, and then are going to go figure out what it is and then go put their hard-earned money into it after seeing Elon Musk say Dogecoin. And then once you realize that's not going to happen, and once you realize that there are no buyers to push the price up after it's announced on SNL, you're going to be like, oh, this is a bust, sell. And then everyone else who bought in for the SNL trade is going to sell. So that, in my opinion, that's exactly what happened. I think it was, probably something that you could definitely learn from if it was something that you were caught in. And it happens with other things as well in the stock market. It happens with stocks. It happens with a lot of things. But anyways, I guess to bring this all back and to keep this video nice, short, and concise, have a reality check with yourself. If you're making an investment or trade or speculative position with money you're willing to lose, really be honest with yourself. Would you be willing to just see that money slowly deteriorate and disappear, right? Because at the end of the day, it's money. And one of the hardest things, whenever I see one of my friends hit it big on a trade, first off, I congratulate them. I'm like, look, I'm super stoked for them and everything. But then the next thing I'll say is, hey, it's easy to forget that this is real money because it's just digits on a screen. It changes every second. It does, like when you're holding money, it doesn't change every second. When you're at a casino, it doesn't change every second. It changes when there's a transaction, an exchange. But with digital currencies, with watching your stock, your brokerage account, it changes every second, your Robinhood, and so it can be very easy to have a disconnect between what those numbers really mean. So when I was in my trading phase, every investor goes through a phase where they go through trading, options trading, all that stuff. I was handling, certain sums of money, and so on my desktop, I put an image of like a Razer keyboard, right? That was like $150 or something like that. And then like a pair of shoes that was like $70, like a pair of shoes that I wanted at the time. And I put that on my desktop. So every time I close like Thinkorswim, I was reminded like, hey, those digits translate into real goods in the real world that you're actually using real money. So I don't know who needed to hear this, but I thought it was an important video to share with all of you, and an interesting concept, and hopefully a good reminder in your strategy. And I also think that, look, if you're going to be long term, there's always going to be a get rich quick scheme that's going to try and distract you. And I think a lot of pardon my language, but the term a lot of people use is shit coins, right? A lot of these shit coins are get rich quick schemes. And yeah, you can gamble a bit of money with that, but be honest, is it really money you're willing to lose? And don't let that distract you from the long game and the more important game, and the game that more people have used to build significant wealth than these other kind of distractions. So that's why we're here, to build that long-term investing mindset, those strategies, build your fundamentals. And so, yeah, hopefully this video was helpful. Just kind of open stream of consciousness video, if you will. So welcome to all the new members, by the way, and I'll see you guys in the next one. Peace.